Hi, good evening, everyone. So welcome to the weekly update on SPY and market stock selection. All right. So if you're still joining me, today I'm going to share a couple of important US updates because right now we are Monday and it's actually a very big announcement over the past few days regarding COVID-19 and some of the stocks. So let me share with you my slides so that you can understand a bit more about what is really happening to the market so far. All right. So right now, I'm going to share with you, first of all, is the SPY weekly update. What will we be looking at for the US market? Okay, so for those who have not, invested in the US market, right? So on my screen here, I'm going to give you one website where I often use them to look at the US stock market. Okay, so if the next time whenever you are trying to invest in the market, right? So this is one of the website that you can take a look. Okay, so this website is called etfdb.com. So you can actually access them and key in the ticker symbol right at the core, at the right side here, where we have this search button. You can key in any ETF. So what is ETF? ETF is actually a tool where there's a basket of stocks that you can actually buy them and invest in them. So in this case, if you're interested in the US S&P 500, right? So when you key in the ticker symbol SPY, okay, I'm going to show you here, SPY, you can see that there are a lot of information. So when we look at ETF, there's only two things that we want to look at. Number one, we look at the, the expense ratio. So what happens, right, is that every fund itself, there's actually a manager that's managing it. And expense ratio is kind of like you don't need to pay, whether is it for marketing or salaries to maintaining the fund. So we want to have our money, when we invest in them, right, to be fully making hard for us to be compounded, aggressively for us, rather than we pay a very high expense ratio that will, eat off into our returns or making the capital that is invested inside to be smaller over time, right? So expense ratio, generally, you want to keep it like less than, I would say easily less than 1%, because in the market, if you are paying like 1% and the market don't perform, they will still deduct away some of the expense ratio from here. So take note of that expense ratio. Personally, when I look at any of the ETF, I would want it to be less than 1% from here. So what is exactly S&P 500? Well, it's actually one of the most well-known ETF in the world, and it tracks the top 500 S&P company. So what is inside here? You can take a look at the holdings, where you will find different stocks here, and the top 15, right? These are the stock lists that we get. So we have Microsoft, we have Apple, we have Amazon, we have Facebook, we have Google, so many different of them. And usually they are one of what we call the leaders in their respective sectors. So at the right hand side here, you will see assets, right? So these assets is really telling us about, for example, right? They're telling us about what percentage of the fund is being invested into this company. And it used to be Apple at the top. Right now, Microsoft has taken over them. I think it's because of their size in the market. And you can see these top three, right, are companies that are probably much more widely known to the people who are using their products or services. So I give you an example like Microsoft, Apple, Amazon, right? These are the ones that we have been, engaging in terms of their services, or even like we buy the products from here. And you can see, right, these are the things that we needed already, even in our daily life, like example, using Google Maps and so forth. Okay, so if you want to invest in all these good companies, right, the shortcut is to go and buy S&P 500, and this is the ETF. Okay, so this is the ETF. So how is the market performing so far, right? Recently, how is the market performing so far? So I'm going to go to another website, right? It's called the tradingview.com. Okay, www.tradingview.com. So here, I'm going to key in on SPY. Okay, I'm going to key on SPY. And let's take a look at the charts right now to see how has S&P been performing so far, okay? Because you all know that the reason why I'm doing all these videos is very simple, is that market has really come down significantly. And if you are not aware of it, or you have not been investing in the market, this is the time where I want you to be aware what is really happening, and you can make certain proper investing decisions, okay? So right now you can see that this is the chart of S&P 500, and till date, right, the market has already gone down from the high of around like 330 per share. They've gone down significantly. So how much has they gone down from here is that you can use this trading view to actually measure. If you base on the latest date itself, they had gone down to about 25%, okay? But if you had gone down to the lowest, they had done about 35% drop. In fact, in history, this is the fastest drop ever for S&P 500. So for those of you who really like discount, right, buying discount, buying cheap, right, this is one of the levels where we have not seen even like I think back in the 2007 period, okay, back in 2007, 17 period, this is the low that they have ever recorded, okay. So one of the key levels, right, that I personally will be looking at is at the area of support where it hits around the 240 to 235 area. Okay, so this is where I will have my first tranche of my bullets where, you know, I'm going to accumulate SPY. This is for my personal portfolio. And this is one of the things, because when the market recovers, right, in the past to now, right, US has always performed strongly over time. Let me give you a big overview so that you understand what I'm talking about. This is the 5 years period, and this is a full year period since the 1990s. So you can see every time there's a big crisis like dot-com bubble, the Lehman Brothers, right, and so forth, market has always recovered for the US market. Okay, so this round is no different. I believe that should the market go down further, I will have certain more of my bullets or tranches to invest in them. So this is what I will be doing so far. All right, so let's come back to really what are some of the important I would say industry that will be affected, and a lot of people are actually guessing, you know, how badly are they affected. Okay, so these are the three that I think immediately we have seen the effect. There is a travel, okay, travel, you're talking about airlines, about booking agency, all right. We have retail like Apple stores, Nike, all these are the big retails, and of course resort entertainment. I'm talking about certain casinos. Okay, but today I'm just going to give you a sneak peek into what these companies are talking about, and what are their forecasts towards the effects of this. So let's take a look at earnings from bookings.com. So this is what they say, right? So in their one of the latest transcript that I got it from seekingalpha.com, where the CEO and the people, they actually announce about the market situation about COVID-19. Okay, so let's read in the red box here, right? This is what they say. So he said that it's not possible to predict where and to what degree the outbreak of COVID-19 will disrupt the travel patterns. That means people who are using bookings.com, okay, whether they book the hotels, book the trips, book the air tickets and so forth, right? Whether it will disrupt them, because so far the infection has slowed down in China. And based on what they observe, right, the new outbreaks are only in South Korea, Iran, and Italy, all right? But of course, now we know the latest facts is that US has been what? Increasing in their cases as well, okay? So what they say, right, is that they believe that this will actually impact the business, but by how much, right? By how much? So let's take a look at the next one where they say these are, they believe, right? So the company did a forecast, right, that the total gross booking will drop between 18 to 13%. So initially I thought that, you know, the market has gone down like 30% and people are pricing in the recession. Okay, they are pricing in the recession, right? And then we have a slight rebound towards, because US has a stimulus towards pumping in money to support industry, to support the people. But so far, what bookings has shared is that it may go down about 8 to 13%. Okay, so from what I understand is that it's not like really more than like 50% of the company revenues will be wiped out. But instead, it's only like what, 10 to about 10% to 15% range. Okay, so this is for the leader in terms of booking.com. I believe a lot of people use booking websites from here. Okay, so another one that I got it was actually the earnings from Nike, and I realized that for Nike, right, a lot of the times where they say this, because Nike actually have quite a big business from in terms of China, Greater China, as they mentioned. This is one of the things that I took out from their earnings. This is what they say. As of 45 days ago, we had closed more than 5,000 stores in Greater China, and remaining open doors, right, will reduce, right, severely reduce their operating hours. And this is true, right? If you go out to see even like Apple stores and some of the companies outside, they are actually reducing. And do you think in the next 3 months what their earnings will be? Do you think the earnings will be better or worse? You can type in the comments below. I want to hear and then reconnect with you guys, okay? But somehow they also say that they're expecting the retail volume in China to plummet. Okay, that means to drop a lot. So one of the things that a lot of people, they want to understand about the company, right, is how much is the revenue contribution from the certain products or services that they have. You can actually use one of the important tools, okay, which is the platform itself. They will be able to share with you. Okay, so one of my key things, right, is that I'm using the Think or Swim. Okay, it's actually a US platform where I get to see this. Okay, so this is where I believe it gives you a very good breakdown about Nike, about apparel, about the different businesses. When you click into it, right, it actually gives you a little bit like, like a forecast, whether will this thing be performing good or bad. In fact, if you don't know about the businesses, you can click on the description. They'll give you an idea about the business outlook. All right. So this is one key way. So what you're going to do is you're going to key in analyze. You go to fundamental, and then you key in on Nike. All the way to the bottom, right, there's this thing about the stock profile. You can see all this information. So it's very clear cut. So if Nike footwear is going down, I will see that the percentage of this is going to kill the business somehow. Okay, so this is what I will be expecting Nike performance from here. All right. So one last thing, right, is where do I get the more information about investing and so forth. A couple of things I think also very good to highlight is regarding Apple, because Apple, right, actually they are one of the very big contributor to the, I'll say, in terms of the IT space. Okay, in terms of the IT space. So you can see here for even for Apple itself, I'm reading up the news whereby they say that, if all these factories were to slow down, suppliers won't be able to give, right? By September, they may have a delay in the latest iPhone. Okay, so even for them, I believe that Apple somehow in terms of production may be slowing down. So I will be preparing when the S&P goes down a little bit, retreat, to look at these companies, whether they are of a certain value. All right. So you want to know more about how you can assess all these companies, you can comment below what you think about investing in them, because definitely today we are looking at a discount in the market already. All right, so that's all in this video. So if you like more of this content, do comments. I would like to connect with you guys. Okay, that's all, and I'm signing out. See you in the next video.